Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Welcome everybody to the Daily Market Commentary. I am going to be your host for today, Charlie Fulkerson, joined by my not very good co-host, Chuck Fulkerson.
Hey, why aren't I a very good co-host? Come on, Charlie. Hope everybody's having an amazing day. It's Monday. I love Monday. If you don't love Monday, we need to figure out what we do to get you going and get you rolling. So if you guys are new to the channel, do me a favor, click that subscribe button down below, hit the bell for notifications. If you're not new to the channel, do me a favor, leave a comment, leave a like, leave a thumbs up. That way the computers know that you are there. So let's go ahead and dive right in. So starting with the S&P. So looking first at the ES. Now, when I look at the ES, we see that we are down about 2.75 this morning. So we're down a little over 2 points. Prices have given us a bit of a pullback from the overnight highs, and now we're just kind of basing along sideways. But overall, Charlie, if I were to ask you, which direction are we going overall, which direction would it be?
Up.
Up. Now, when we're going up, who's in charge when we're going up?
The Bulls.
The Bulls. So the 4 hour, which is our big picture, is what tells me, am I a buyer or am I a seller? So since the Bulls look like they're more in charge, Charlie, what are we going to be, buyers or sellers?
Buyers.
Right, so we're more of a buyer. Now we look at the 4 hour time frame first, and the 4 hour time frame tells me that I'm more of a buyer. So when I come back down to the 1 hour, and I look, the problem is when I look at the 1 hour, I don't really have any clear areas of demand, any clear buying signals and buying areas. So we actually, we're looking at the 15-minute level as a better opportunity. And so on that 15-minute level, we've got the origin of this rally higher. Now, Friday, we had a breakout trade. I don't know if you guys caught the breakout trade on Friday. If you did, leave it in the comment section down below. I always love to hear those things. But we had a breakout trade on Friday as price moved up from that zone. So since price moved up from that level on Friday, I think the origin of that breakout could still be valid. Now, notice we did get one retest of this area already. And so we have another opportunity to get long on a retest again. There is belief that there's reason to believe that this area down here could be valid if we break through this 2887 by 2884 region. So just keep that area in mind. As far as shorts, are there going to be opportunities to short? Yes. But when the markets are telling me on the big picture, because remember the big picture is our 4 hour chart. And the 4 hour chart, as Charlie clearly told us, is going up. So since the 4 hour chart's going up, your probabilities are going to be better if you're a buyer. That's really going to be your better trades if you're a buyer. So next, let's look at the NASDAQ. So looking at the NASDAQ, now in the NASDAQ, we're not as strong as we are in the S&P relative to to those new highs.
It has a little bear in it, by the way.
There's a little bit of a bear area up here. So when you look at the NASDAQ, Charlie, on the 4 hour, what direction has it been going?
Mostly up.
But what's it been doing here for the last couple of days?
Going down.
Well, not really down, but it's not going up as fast, right? I mean, look how fast it was going up through here, right? And now it's kind of stalled out a little bit, right? It's still going up, but it's going up a little slower, and we call that momentum. So the momentum has really started to slow down, right? Momentum is starting to slow down, and the way that I can see that is I can throw my momentum indicator on here, and we can see that even though I have higher swing highs in price, I've got slightly lower swing highs in momentum. It doesn't mean that I'm willing to be bearish, by the way. All it means is that we could be loading up, if we get a little bit of a pullback into one of these regions. Now, we had a really nice bounce off of our NASDAQ demand level last week, and there is an area of supply up above us. Now, that area of supply up above us, you got to go all the way back to find that thing back in October. So that level of supply that we've identified up above us doesn't come into play until, you've got to go all the way back to October of last year to see that zone. And that zone still valid because it hasn't been broken. Okay, so what I'm doing is identifying that level that's not yet been broken, and it's this little bit of basing before a strong drop. Now, this is the one of the advantages of doing this daily market commentary is that we don't delete the lines on the charts, and this is really a line that we had established months ago that we're making our way up to. It doesn't mean it's going to hold, but right now it's a very small level with a decent little move away as a potential. Next, crude oil. So in crude oil, if I look at this one, so crude oil, if I look at the 4 hour, so we always start with the 4 hour. Charlie, what direction is crude oil going in the 4 hour?
Up.
It's going up. So if it's going up, who's in charge?
The bulls.
The bulls. Now,
once again.
the bulls are still in charge of crude oil. Now, if I look at this area down here, we have this little rally, a little bit of sideways, and another rally up. So there's two lines together. And what I always tell you, Charlie, when there's two lines together, we call that the bottom of a what?
Mountain.
A mountain. Now, if there were two lines above me, that would be the top of a
slide.
Right. So the two lines together is the top of a mountain, is the bottom of a mountain, and we call those are called reversal trades, right? So there's two types of trades. The two types of trades that we look at are called reversal trades, and the bottom of a mountain is a reversal trade. And a reversal, what happens when things get reversed, Charlie? If you reverse the direction? Opposite. Very good. So if prices are going down to the bottom of the mountain and they reverse, then they're going to go back up, right? And so that would be a reversal trade. Now, but prices may not make it all the way down to this level, and this little level is a decent little base. And if it doesn't make it all the way down to that level, we do have this area here where we keep hitting our head, and we keep hitting our head, and we keep hitting our head, and we keep hitting our head. What would we call that one line if we keep hitting our head off of it? It's the ceiling.
Of course it is.
Now, so remember I told you that there's two types of trades, reversals, and you know what the other one is called? Breakouts. So a breakout is when it breaks out through the ceiling, and if it breaks through the ceiling, which way is it going to go?
Keep going up until it hits a new ceiling.
Right.
I keep saying that to you, Dad.
Well, it might hit a new ceiling, but it might also hit the top of a slide, right? It might hit a new ceiling, or it can come up to the top of a slide. So if we break out above this 63.54, I think there's room for price to make it maybe a full dollar in price up to this region here, which would be the top of the next slide, and that slide is really found on, you got to go all the way back to the 4-hour chart, and we're looking at this area in here. So it's just kind of putting together breakout trades and reversal trades onto one chart. That's the purpose behind here. Now, when you look at this picture, you see on crude oil that we have, I'm looking at the 4-hour at the moment, but look at this. We've got levels of supply above us and levels of demand below us, right? So if you really wanted to think about it, think of this as a grid, right? Think of this as a pricing grid with our most probable supply areas above us and our most probable demand areas below us. And the purpose behind this is to see that there's going to be reversals and breakouts along the whole way, but I can see everything in one spot. And we do that because when you get good at seeing how these levels form over time, it's going to help your trading in general. So don't rely, I'm not a huge fan of relying on outside tools to identify these levels. Get good enough that you can identify these levels on your own, but leave the lines on the charts because that's what helps you to see how they form and how they evolve. Last one I'm going to look at today is gold. I'm running a little bit late on time, but I want to look at gold here real quick. And GC is rallying up into what could be an area of supply. This is that 1303 by 1305 area. My only problem with it is that we're basing in front of the level. We're doing a fair amount of basing in front of the level, and anytime that there's this much basing in front of the level, let's see if I can zoom in here better this time. So the basing that we're getting in front of this zone right in here definitely makes for a lower probability setup. So at this point, I'm not as comfortable taking the short on here because of the basing before the level. However, we may get a little reversal out of here, and if your risk tolerance allows you to do it, then you can certainly take it, but just be quick to take your profits off the table. I didn't want to spend too much time on any of the other markets because there wasn't a whole lot else in here to cover. We had talked last night about a little Aussie level, and price had touched close to that Aussie level, but we're just kind of basing along inside of it in there. Our bond trade, we're looking for a potential breakout in the bond as kind of the next iteration of the next level, and then in the Canadian dollar, we had a little reversal area down here. So a couple of levels in there, nothing a whole lot to go over as far as today goes on either one of those. The Japanese yen actually made it into our level from our live trading room last night. So last night we had a live trading room. Japanese yen made it into that level and has started a little bit of a reversal. If you took that trade, then following our 6 candle rule, it's time to take your stop and move it to break even because we're not getting a huge reaction off of that level, but it is starting its next leg to the downside. So if you guys have any questions, please send us an email, support@tradersarmy.com.
I have a question.
Oh, Charlie has a question.
Are we going to do the
GBP, the Great British Pound? Mm-hmm. Yes, so the Great British Pound looks like this. You want to see the pound? Mm-hmm. So here's the pound, and the pound up above us here, there's 2 lines together, so that's the top of a what?
Slide.
Top of a slide. So when price gets back up to the top of the slide, who's going to take over?
The bears.
The bears, right. And when the bears take over, what's the button that we push?
Sell.
Sell. But let's look. So this is the 1 hour. You see up here, this says 1 hour. Let's change it from 1 hour to 4 hour. Because the 4 hour tells us, should we be a buyer or should we be a seller? And if the 4 hour is going up, then we should be a what?
Buyer.
If the 4 hour is going down, then we should be a seller.
But I think you should be both, Dad.
Right. That's a good point. We should be both because it's kind of going which way?
It's kind of like a triangle.
Yeah, it's kind of going
with no bottom.
Right. So, but no, that's a really good observation, Charlie. So I bet you there's lots of adults that were trading that wishes they could see that triangle that you saw just as clearly. Okay. So we're kind of going sideways. So does it tell me I should be a buyer or I should be a seller or I should just kind of
Yeah.
Right. It's kind of in between both. So when I go back, so that's the 4 hour, right? The 4 hour is what we call the big picture. It tells me, am I a buyer, am I a seller? Then we go to the 1 hour to see, okay, where do I buy and where do I sell? Now, so since I can be both, up here, if price gets to here, what am I going to do? Because this is the top of a slide.
Slide.
Now this, we were looking at this one, and we said this one can act as a floor. So if this blue line acts as a floor, if price comes to the floor and bases on front of the floor, and then it goes down through the floor, what button do we press? If it goes through the floor.
Sell.
Sell, because who's going to...
Because... You forgot the because.
Because...
Once it comes down, then once it hits a new floor, then it will stop.
Right.
Maybe it will go up again through that floor.
Right. So I think that if we break through that floor of 1.3069, that the next area of stopping would be where we have... So look at how price went up right here. So that would be the bottom of a what, Charlie? If price was going down and then it started going up, would call that what kind of a trade would that be? That would be a reversal trade, right? Mm-hmm. So what goes at the bottom of a reversal trade? 2 lines, and we call that a mountain.
Mountain.
Right? So if price goes below here, that's its next stopping point. So, sound good? All right. Well, that was today's lesson. For those of you guys that are teaching people how to do this, if you've got, I teach Charlie how to do it, and he's learning a little bit at a time. So hopefully you guys were able to catch something out of what we taught today. It's a little bit of it's how to trade from a 7-year-old. All right, Charlie, say goodbye to everybody.